Good morning. It's November 19th, and it's cold. 8 degrees out here in DeKalb, Illinois. And we're going to go through the Wall Street weekly wrap-up for this week. First, the producer price index started off the weekend. It was good. The data showed that, hey, where numbers are going down for the producers, 8.4 versus 8 on the total PPI, and the core, which excludes food and energy, was also low at 6.7, so those are good numbers. The heat map for the week showed that healthcare and retail, almost literally dragged up by Walmart way over here, was good. Energy, we'll talk about. And G2 or G20 meeting up in Indonesia, President Biden met President Xi from China, and it was the first time, and nothing was said that was inflammatory, and very nice meeting. They're going to work on a lot of issues, especially with Taiwan and the COVID issues, and how they're handling pricing of everything from parts. And I'm sure China doesn't like the semi-chip ban that we have, but that's part of the import and export issues. Stat of the week has got to be oil. The numbers, even though the producer price index was good, Mary Daly, we'll talk about raising prices. Economies in Europe are going to go into recession. They're predicting U.S. recession. So crude, which was in the 90s, dropped down just a little bit below 80 and then bounced back to close at 80.13. So this is a number we're watching. You can see it broke down one support level previously, and the other support level at 80 is one that a lot of people are watching. If not, it could go down to $65 oil. So we'll see. They'll still make money. We still are going to hold our energy stocks. But a lot of people are watching it because the Saudis had cut production, and this is not supposed to have happened. Walmart, our star of our portfolio, star of the week, beat handily 18 cents. I found it amazing. The revenues rose 8.8%. We bought at the Circle on September 9th, around this area over here. I wanted to make sure that, when it dropped, from the summer, it was pretty brutal. That was a big gap down, and, for a lot of people, 25% in a stock that's fairly stable in a bellwether retail, that was a brutal lesson. And I always watch the issue of, is it going to go up and break this support? And this support, you can see kind of like all these little peaks. This is one peak, this is another one, and it did. So we're in a new territory, and Walmart's almost back into the graces. It's filled its gap, and looks good. Mary Daly, the San Francisco Fed, off the table when asked about pausing. No, they're going to get the rates to make sure the inflation slows. I don't think they're going to get 2%. 3 to 4%, that'll be okay for a while, but they're going to keep the rates up high. I think we're going to get 5-6%. Nvidia, another one in our portfolio, a great quarter as far as the data center. Revenues overall fell down, but, again, the gaming's down. Crypto's completely collapsed for Nvidia because, look at FTX. But, I always think, wow, they got $3.8 billion in revenue. That's good. 31% up. So Nvidia's got some headwinds coming up. It broke out of this, descending wedge over here, and it looks pretty good. I think, semiconductors are fairly cheap right now, and some people won't like it, but that's it. BlockFi is one of the crypto exchanges. Come in there. You could get 10% is what I remember them advertising. And then, of course, the FTX has affected them, and they call it the shuttering in the industry. You're going to see a lot of people, how much, did FTX lend them to get them out of bankruptcy back earlier. And, Jim Cramer, I love Pomp, but he put me in BlockFi, and now you might not be able to get some of that money out, or it might not be there. So, we'll see. Midterm elections, the Senate by the NPR said it's still a tough. Other ones have picked 50 seats for the Democrats, and then only the Georgia Senate runoff is left. The NPR also picked the GOP to have 218 votes, so they control it. And that means a split House and Senate, which is what the stock market likes. That means, you're not going to get this blank check, as some people phrase it. But 17 out of 19, that's not bad odds. If you have to be in a market, you want to be in the market with 17 out of 19, where the market did better in the 6 months following the election. So I always tell people, we're fully invested. We have predicted this is going to happen, and It's been hot since October. And the last one we'll talk about is Target. Holy smokes. Another one, just like Walmart, always comes out the day after Walmart. You can see the gap drop in the summer, and it was brutal, just like Walmart. And Target really never came back. It dropped because they missed earnings, but I am amazed at $400 million in theft. Holy smokes, that's a lot of jobs. That's a lot of stuff being stolen in Target. And they say it's professional rings, which I don't doubt. Home Depot, Walgreens, theft is a real problem. I mean, we're going to have to deal with it in some way, but a lot of this stuff is when you go in and don't, the constant shoplifter is getting caught and not put in prison, then you're going to have to deal with it. That's going to be a problem. And in some of these stores, they're going to decide, hey, we're not going to be in a market. We can't afford, 10% of our inventory getting stolen or whatever it is. But I think Walmart is the stronger of the retail stock, so that's the one we own in our portfolio. And Target, it didn't drop. It held support, so that's good. If you own Target, wait till it breaks out of the triangle either way. But I think, it's a gamble if you buy it. Again, they've had 3 bad quarters in a row, and Walmart only just 2. The Walmart's quarter, I want to say, is really good. So think about buying the strongest in the sector, and to me, it's going to be Walmart. All right, we'll see you next week. Have a good Thanksgiving. Don't eat too much and enjoy. Remember, Thanksgiving to New Year's is a lot of stress for people. So, try to relax, enjoy something, go do something you want to do, and I'll see you next week. Thank you very much.